UBS is taking over Credit Suisse. So this is a commercial solution and not a bailout.
Welcome back to Invest Global. Today we're covering everything you need to know about this merger and acquisition deal with Credit Suisse and UBS, the two largest banks in Switzerland. If you add up all the total assets under management, it's actually 1.4 times the actual GDP of the total country. Both of these are globally systemic important banks. In this video, I'm going to be breaking down everything you need to know with that, going through the other globally systemic important banks here directly from the Financial Stability Board's websites, also going through FINMA, which they actually brokered this transaction, the Swiss authorities with UBS, and everything you need to know as far as the merger details. So very, very interesting here. And, recently I've been covering all this banking contagion in pretty good detail here in previous videos. So I'll have everything linked down below in the description along with timestamps for this specific video. So let's get into it. Basically, UBS just acquired Credit Suisse for $3.2 billion. This was just an all shares deal, so there was actually no cash transacted. Basically, Credit Suisse shareholders, so if you were invested into Credit Suisse, you'll receive one UBS share for every 22.48 Credit Suisse share that you held. Basically, what this means is all the equity holders, at least they get something, but the interesting part about this is the bond holders of these AT1 bonds, which are actually kind of engineered in 2008. In 2008, the other interesting thing is Swiss authorities actually bailed out UBS. In that deal, actually what they said is Swiss authorities basically came out and said, hey, we're not going to do this anymore. We're not going to bail anyone out. So it's very interesting to see, the Swiss finance minister here talking about, hey, this is definitely not a bailout. No problem. Nobody worry. Just to move on. And very, very interesting. So basically, like I said, this original offer was actually $1 billion. They wanted to make sure that this was done before financial markets in Europe really started this week. So today's Monday at the time of recording this. Bogota time, it is 2:06 p.m. And just in the last week, this Credit Suisse market cap was $7.5 billion. And like I said, combined assets under management of this is 140% of Swiss GDP. So SNB, they actually pledged a loan for this. They're kind of backing up this deal, making sure everything is good. So they pledged this loan of $108 billion, even though, like I said, this wasn't even a cash deal. This was just an all shares deal. And I'll be getting into the actual bonds here in a minute, why this $17 billion in debt is now worthless for the derivatives portfolio. Basically, the Swiss government is covering losses up to $9.7 billion. And just for a little bit of context, so all of this I'm talking about in US dollars because it's the global reserve currency. But obviously in Switzerland, you have the Swiss franc, so CHF is the actual ticker symbol, and it's about per $1 US, it's like 1.08, so almost 1.1. So just keep that in mind. And then equity holders, like I said, they actually got something, but bond holders are completely wiped out. Globally systemic important banks, these are very, very interesting. There's about 30 of them across the world. If we look here at the Financial Stability Board's website, they basically talk about these, essentially meaning that, if these banks go under, it can not only cause an issue in domestic economies like in Switzerland, but actually it can cause contagion across the global economy. So you can see a lot of these other GSIBs here. These are very, very interesting to watch out for. And, this concept of too big to fail is definitely, it's very, very true. It's important to, that's an argument for another day. I'll kind of leave that up to you, but it's interesting, right? So if you can back these banks up, obviously you're not going to have contagion, at least for the short term, but really you're just putting a Band-Aid on, a long-term problem. You're just having a short-term solution. So you can see a lot of these. Obviously Credit Suisse was one, Citigroup, Barclays, BBVA, Deutsche Bank, HSBC, there's a ton in here. So very, very interesting. Wells Fargo's in there, UniCredit, UBS. Very interesting to track. I'll have that link down below in the description. This is FINMA. So basically they kind of oversaw this deal and they actually proposed the deal to UBS. And with this, obviously, in any other scenario, I don't think any bank would really acquire Credit Suisse, just because if you look at their balance sheet, everything, it's really a mess. And the fact that they had to do this with the shares is very, very interesting. So basically it talks about how they've been monitoring Credit Suisse for several months. During this time, the bank has taken a number of measures to stabilize the situation. It's all about stability. These were not enough to restore confidence in the bank. However, the more far-reaching options were also examined to protect depositors and financial markets. The offer by UBS to take over Credit Suisse has proven to be the most effective solution. So in my mind, there is really only three scenarios. So number one, you let them fail. Number two, you nationalize it so the government actually takes it over, which they're trying to kind of sort of is a mixture of this. And the other one is, this bank would get acquired. Since Switzerland really is in global regard for banking is held up to kind of the highest standard, right? So like private Swiss banking, really the best of the best. Singapore is also great. So you can go to, there's a lot of great places. I personally personally like Uruguay, and I also like Georgia as well. I talk about that a lot on this channel, is making sure you have diversified bank accounts outside of just your country of, where you hold citizenship, residency, where you have your business, having multiple bank accounts, so you're diversified international. And very, very interesting here. So there's a lot to go through. I'll have this link down below in the description. If you want to contact their media person, you can go ahead and do that as well. So anyways, these other two articles are kind of interesting. This is a Zero Hedge one where they've been covering it pretty closely. So this is what I wanted really to cover, is these AT1 bonds. So these bonds, basically they were bailed in and written to zero. So FINMA is this, right? So they basically determined that the Credit Suisse additional Tier 1 capital in the aggregate nominal amounts, approximately in Swiss francs, 16 billion, were written off to zero. This wipeout, pardon bail-in, is the biggest loss yet for European 275 billion AT1 market, wow, far eclipsing the approximately 1.35 euro billion loss suffered by the junior bondholders of Spanish bank lender Banco Popular SA back in 2017. Very, very interesting. So, so AT1 bonds were basically introduced in Europe after the last GFC to serve basically as shock absorbers when the banks start to fail. The Euro area, not just Switzerland, but all across Europe, really into crisis. So I think it does make sense the government came in. And I just find it hilarious that all these authorities are like, nothing's a bailout, don't worry. So, the previous videos that I made about this, I went really into detail about how the U.S. basically bailed things out. The previous video talking about the new bank term funding program that the Federal Reserve created, also the Exchange Stabilization Fund, and probably in the next video that I'll make, we'll be talking about the U.S. dollar swap lines that they just increased from a weekly basis to a daily basis as far as protecting the U.S. dollar as a global reserve currency. But that's basically all for this video. Again, so just to wrap up, this was just an all-shares deal. Basically, UBS acquired Credit Suisse. It'll be very interesting to see exactly what they do. Credit Suisse they have many different kind of branches inside of them, and it'll be kind of fascinating to see exactly how they do this. But like I said, Switzerland actually bailed out UBS in 2008, and the Swiss authorities had came out at that time, and basically they were like, hey, we're not going to do this anymore. Now in this scenario, they have to make sure, that they're sticking to what they say, and it's fascinating to see. So that's basically all for this video. If you guys enjoyed it, like the video, subscribe to the channel, stay up to date. Wanted to make it a quick one, trying to kind of break these things down in relatively easy to understand way, and I'll be covering a lot more topics here throughout the week, but let me know in the comments if you have any questions, anything like that. I'm always looking to improve, so you can let me know if you want anything changed. If you like the video, like it, dislike it, whatever. If you want to book a call with us, we can help with international strategy plan, anything you're looking for, setting up businesses internationally, citizenships, residencies, tons of different things. So that's basically all for this one. If you guys enjoyed it, again, like the video, subscribe to the channel to stay up to date, hit the notification bell so you don't miss out on a new video, click all, invest global, and until next time.